Hey everybody, how is it going? Welcome back to my channel. Well, welcome back to my channel if you've been here before. If you haven't, please consider hitting that subscribe button before you leave. And also, if you don't mind giving me an early like the smash button, I would greatly appreciate that. But in this video, I'm going to talk about the Nasdaq Composite and the overall market a little bit. But I think we could be getting close to a tradable bottom, so I want to show you some things that I am finding. But please remember, I am not a financial advisor, so take all of this with a metric ton of salt. All of this is just my opinion. Please make all of your own trading and investing decisions. I'm just trying to show you, just some similarities I see with this market and some other bottoms. But right here we have the daily chart of the Nasdaq Composite. And when you're looking at the daily chart on some of these indices, it can be a little bit of information overload, a whole heck of a lot of chopping around, especially in the market that we've had lately. So when you get a market like this, what I like to do is, take a look at the weekly chart on as many things as I can, just to get a little bit more context. And I found some similarities in the past that are making me think that we could be getting pretty close to a tradable bottom, actually a little bit closer than I thought. Looking at this chart on the daily chart, you can definitely see that we have just broken this support area, had a little bit of a reactionary bounce up until failing again and crashing through that 200 period simple moving average. Now, normally when you get something like this, you're usually in pretty big trouble if you don't get back above that 200 period simple moving average quickly, and it doesn't look like the Nasdaq wants to do that. We had a gap up today, and surprise, surprise, the market is selling into it. But you know what? Let's go take a look at the weekly chart, and I'll show you what I found. Jump over to the weekly setting, and actually let's move up the stochastic oscillator, because that's what I want to talk about in this video. Let me get this line out here. That's a little distracting. Zoom in a little bit closer, we can see that we have broken the 50 period simple moving average on the weekly, and we have crossed below the deep oversold territory on the stochastic. Now, this doesn't happen very often on the weekly chart. At least it hasn't happened often lately, but even going back all the way to the bear market of 2000, when the internet bubble popped, it really wasn't all that common. But right now we have crossed into it, and usually when that happens, we end up getting a tradable bottom within the next couple of weeks or so. The last time it happened was way back here during the COVID collapse, and you can see that it wasn't even all that deep back then. But of course, that also has to take into context the price action before the sell-off, because that affects it a little bit. That affects the stochastic oscillator just a little bit. But looking at it right now, I would guess that we're probably about 2 weeks, maybe 3 weeks at the most, from a tradable bounce. And again, this is just my opinion, but the way that this price action is looking, that would be my guess. And let me let's go back in time and take a look at some other occasions when the stochastic fell into deep oversold territory. Now, of course, during the COVID collapse, it happened so quickly, and it was such a deep breakdown into that oversold area, within probably just the next week, certainly into the second week, we were already making new higher highs on the Nasdaq Composite. Now, I'm not saying we're going to get this kind of a bounce right now. Obviously, there was a lot of stimulus involved, a lot of the Fed's handiwork was involved in this run up. But I just wanted to make a point that when we get down to these oversold territory, it's usually the time of most pessimism, but it's usually a great buying opportunity. Now, if you had to put me on the spot, and this is just a guess of what is going to happen next, I'm guessing it's going to be more like this 2018 sell-off. Like this first little dip we had down here into oversold territory was right here. I'm thinking that's where we're at right now, and I think we're going to get a little bit of a bounce up, and then it's going to accelerate to the downside, and this is going to kind of be the flush. I just think it's going to happen this way because of everything that's going on with the economy, with interest rates, with the Fed. It just doesn't seem like this is going to be the absolute bottom just yet. I'm figuring that we're probably not going to get done with this chop until early summer, at the earliest. And that, like I said, that is just a guess, but this doesn't seem like it's going to be the absolute bottom, you know, where it just turns around and goes. Hopefully I'm wrong, and that's exactly what happens, because these things can be very difficult to time. But if we get a bounce up like I'm thinking, I'm probably going to get some you know, downside protection, either buy some puts or maybe buy some inverted ETFs and try to take advantage of this move down. Now, when you can anticipate a move down coming like this, the beautiful thing about it is if you grab a bunch of puts or a bunch of inverted ETFs and you happen to play it just about right, or at least pretty close to just about perfect, when you close the trade out after this deep acceleration down, that short position becomes a very big gain, and you have a halfway decent pile of cash when you're near a tradable bottom. You know that, and that's of course if everything happens just perfect, but that is my plan, and hopefully it does work out perfectly. But let's actually go back in time just a little bit further and take a look at some of the other times when the Nasdaq has been in deep oversold territory. Here is one right here. And as we can see, it was about 3 to 4 weeks from an absolute bottom. You could see that it was pretty close to a bottom. And if you'd have been patient, waited 3 or 4 more weeks, you would have been in the green. Let's go back just a little bit further and see if we can find another area. You can see there's been plenty of times where it's gotten close, but it actually didn't hit that area, and that's when you got a nice bounce as well. So, I mean, a lot of these bounces come before the stochastic even gets this deeply oversold. But here is one right here. And you can see just within about a week or so, we were already making a new higher high, at least above the previous week's candle anyway. Here's another one right here. Oops, let's see if I can do it. There we go. You can see right here was when that first time we crossed into oversold. Within about, actually the market steadied itself within a couple of weeks, and probably about 3 to 4 weeks later, you know, it was already making a new weekly high, at least higher than the previous week. So let's go right here. This is one where it just barely touched right here. And you can see that was a tradable bottom. You can see this was a tradable bottom, but this is kind of a little bit what I am expecting to happen right now as well. You can see it's just a little bit different, but you had a quick move down into oversold territory, then you had a sharp bounce up, and then it really accelerated till it found you know, the real short-term bottom in the market. You know, this is kind of what I am expecting to see. Who knows if that happens? Only time will tell. I'm probably going to be playing it like it's going to be like that, so if that does happen, hopefully I will clean house on it. You can see right around here, it just barely didn't make it down there. Here's another one right here which just barely didn't make it down, but that was also a bottom. And now we are getting down towards the financial crisis. Now, the financial crisis, and when you get in these deep bear markets, these are the only times that you see where it gets into deep oversold territory and actually hangs out underneath it. And that doesn't even happen all that often in the bear markets. You normally get, you know, some halfway decent bounces in these bear markets, but you know, you can see when it really accelerated to the downside, this is when the market was in the depths of its despair, just kind of hanging out below that deep oversold territory. But if you recall, you know, some of the best investors in the world, this is when they were buying the heck out of the market, and obviously they were proven right. You know, I was thinking that the market was not going to bounce as you know, as quickly as it did back then, and I was wrong. It took me a little while to jump back into the market, but when I first started trading, it was during the crash of the internet bubble, and that thing seemed like it took forever to bottom. But you know, if we go back a little further, we can see during this bear market we hit it a few times. See if I can put these on here. Gosh darn it. But right here, we were probably pretty close to a slightly tradable bottom. I mean, in a bear market, you've got to be really nimble, because when the overall trend is down like this, I mean, you don't get much of a bounce. So if you're fortunate enough to catch one of these bear market bounces, you just got to be quick. But here is another dip right here that we had before the crash. And as we can see, that was a great buying opportunity. I think you guys are starting to get the theme here. Now, the only thing that I can tell you different on playing this signal. If you are in a confirmed bear market, now this is just something to remember, if we get into a confirmed bear market, you don't want to be looking for that bottom when it gets deeply oversold. What you want to look for is when they cross. If you wait until the fast line crosses above that slow line, kind of like in the MACD indicator, that is usually the tradable bottom in a bear market, because the bear markets can tend to trend lower for quite a while, so if you know you got that trend to the downside, just wait for those lines to cross. But here's another area. I'm just, after I do this one right here, I'm just going to go to the bear market of 2000 just to show you some more crosses. So I'm going to wind it all the way back here, skip some of those other bottoms because you guys are getting the point on that. So here is the internet bubble right here. This is when, right about here is when I first got into the market. And, when the market was running up like this, I was starting to look at how some of my stocks and trades were compounding. And I was like, you know what? I'm going to be retired in about, I don't know, maybe 9-10 months. And then I'm just going to, live on the beach for the rest of my life. But unfortunately, that's not the way the world works. We had this big internet bubble, and it just led to this horrific bear market that seemed like it just took forever. And even after this bear market, a lot of those growth stocks didn't really come back even after we got into a confirmed uptrend. But, looking at some of these tradable bottoms in the internet bubble collapse, I should say. If you would have bought here where it was oversold, that was a decent tradable bottom. This is one where we had a little dip, and that was sort of a bottom if you were really nimble. And there's one right here. I guess we can call that one too. But as you can see, when you are in a bear market and the trend is down, it's going to hang around that oversold line. So you have to be really careful. You kind of have to wait for the cross. Like here's the cross right here. And there it was a good buying opportunity. So as long as you wait for the crosses in these bear markets, that's just the one caveat that I use with this indicator. If the overall trend of that stock or that indice is down, you got to wait for those crosses, because these things can trend down longer than we think. So I just wanted to show you guys that on the Nasdaq Composite. Let me go forward here. Go all the way back to the future. And this is where we are right now. So we're just barely getting below that 200 or that 20 setting on the stochastic oscillator. I think we're probably about a week or two away if you had to, if you had to hold me to a prediction, but I think we're a lot closer than people think. I think a lot of people are thinking this is going to be the absolute bottom, or the bottom is actually going to drop out of the market right now, but I think we're getting pretty darn close to a tradable bottom. But let's actually get into the trades that I made today. All right, well, I only made one trade today and actually decided to take off another third of my position on Occidental Petroleum. I sold some today at $35.98. So that's going to be right about here, give or take. And man, this thing is still selling off. Trading day is still going, and I don't know. It just seems like it's getting weak, especially after looking after these three candles right here. You got some topping tails and it's starting to roll over. And of course, the market itself is getting weak. Man, maybe I should have taken it all off. But the reason why I decided to take a third off today was because looking at the USO, and this USO is actually completely turned around. When I saw it today, it was just making another topping tail, and you can see that the USO, which of course is the oil ETF, and a lot of those oil stocks, they move lockstep with the USO. I shouldn't say that, but more often than not they do. Not always, but anyway, you can see oil has been in a very strong uptrend, and I thought it was getting kind of tired, so maybe I should take another third off in case, this thing turned around. It was still green when I made that decision earlier. But man, this thing is just, looks like it could be a pretty decent short, actually, if it breaks the low of today on Friday. So Definitely looks like a little bit of a morning star, not quite a textbook, or I should say evening star, not quite a textbook evening star, but definitely with some topping tails here, and the trend is already pretty extended. Usually if I'm in something like that, I'll at least start trimming some of my position, and that's what I did with OXY. But now look at how nasty this thing looks. Maybe I should take the rest of it off before the trading day closes. But that is the only trade I made today. I almost made a day trade in DATS. Was looking at this one earlier. Wow, this one has rolled over too, but actually the trade would have worked this morning, but I chickened out because it was close to this 50-period simple moving average. I was kind of afraid that it was going to have a hard time getting through that 50, and but the way it just set up so beautifully, I probably should have taken it anyway. Of course, in hindsight, it would have worked, so of course I should have taken it, but in the heat of the moment, especially with this market, man, it's just pretty difficult to make some trades. But let me take this thing back. I was watching this one on the, let me situate this a little bit better. But I was watching it here on the 5-minute chart. It had the gap up and it ran a little bit, pulled back, found support at the 8-period exponential moving average on the 5-minute chart. So I was looking for a ceiling. I saw these two candles right here. I saw this candle go up, and then I saw this one starting to go down, and I told myself I should put in a buy stop order right here at 378, and I actually put it in, and then I canceled it, and within a couple of minutes this thing exploded, actually went over 4. I probably would have put my price target in just below 4. So if I could have got in at 378, let's say I would have got a bad fill and got in at 380, that still would have been, you know, what, a 7% gain or so? If my math is correct. It's probably not correct, but it still would have been a halfway decent gain in just a few minutes. So this trade would have absolutely worked, but unfortunately, I chickened out because this market is total crap. I mean, just when you think the market starts to rally, it just rolls over more. But hey, this market is what it is. I think we're going to get some great buying opportunities in the next few weeks. I will be keeping an eye on them, and if I find any, I will let you know. Well, that's all I have for this one, everybody. If you have any questions, please leave them for me down there in the comment section. I'll get to them as soon as I can. Thank you so much for watching my video all the way to the end, and until next time, take care, everybody.